Moving forward with this strategy, like I said, guys, this is a short-term trading scalping strategy that we're going to be focusing on 5-minute time frames and using 3 exponential moving averages as our indicators to pinpoint these winning positions. All right, very, very simple, guys. And again, we try to keep things as simple, but I do recommend that if you're going to try out this strategy or any other strategy, make sure that you practice with a demo account, so that way you can go about, you know, trading and trying these strategies, and if you make mistakes, you're not putting your funds at risk. So very, very important, guys. And as we go along in this video, if you do have any questions or comments or need help about anything as we go along, please feel free, drop a comment, let me know. And you can also reach me directly at prestigeboundary@gmail.com. All right, so obviously we need a charting solution, and I know that many people have always been asking me about whether or not they could use the charts in their broker, and I highly recommend not doing that, guys, because charts within a broker don't really provide all the resources that you need in order to follow and apply different strategies. Okay, they may only have a handful of indicators to use, may not have enough of what you need for a particular strategy, and also depending on the broker that you have, you know, some of those people can be considered as market makers, and what that means is that the charts, the values that are provided in the broker charts may not reflect the actual live market value. So that's why I say it's important and safer that you use a charting solution. You can use MetaTrader, you can use TradingView, which I'm using right now. It's free to use, guys, but personally I like TradingView because it's free and it has everything you need. All right, so for this example, guys, we're going to be using the the Euro GBP. All right, now what you want to do is focus on the 5-minute time frames. What that means, guys, is that we're not focusing on trades that are going to last 5 minutes. That just means that every candlestick that you see here represents a 5-minute time period. All right, guys, very, very important that you understand the difference between that, because I know that it can be a little bit confusing. We're not targeting 5-minute trades. We're just looking at the market from a 5-minute time period. Okay, so what I'm going to share with you in this strategy is not only how to set it up, but also how you apply this strategy for both buys and sell trades. And the reason why this is important is because when you're trading, you're going to be doing one of two things: either buying or selling positions. Okay, so very important that you understand the fundamentals or the basics of how to apply this strategy in both areas. So I'm going to first share with you a sell position using the strategy, and then I'm going to share with you a buy position for that pending trade that we have for the New Zealand dollar US dollar. Okay, guys, so for the strategy, guys, we're going to need 3 exponential moving averages, and to add these indicators, we're going to click this little tab here. You type in exponential moving averages, or just type in moving averages, and just select exponential. Make sure that you select exponential and not any other variations of moving averages, because if you do, you're going to throw off the strategy completely. We've seen this happen before many times, guys, so don't make this common mistakes. Exponential moving averages is what we need for this strategy, and we need 3 of them. Okay, so what you're going to do is just click them 3 times, and it's going to throw in 3 exponential moving averages onto your chart. But now what we need to do is adjust the settings. All right, so we're going to click this little tab here, and we're going to make this one blue. And what we're changing here in the inputs is the length. Okay, everything else stays the same in its own default settings. The only thing we're changing here is the length. This one, our blue one, is going to be set to 21. Click OK. Go to the next one. We're going to adjust this to 13, and we're going to make this color red. All right, and the last one is going to be yellow, and the inputs for that is going to be set to 9. Again, everything else stays the same. You don't have to copy the colors, all right, that I'm doing for the numbers. You can if you want to, if it makes things easier for yourself, but the reason why I changed the colors is so that way they're just easier to distinguish and identify. All right, so we'll click OK, and there you go, guys. This is how it's supposed to look. All right, so the way that this strategy works, looking at it from the 5-minute time frame, we want to look for areas where the market doesn't touch the exponential moving averages for no less than 25 to 30 minutes. Now again, looking at it from a 5-minute time frame, that means we are looking for 5 to 6 candles that haven't touched the market. All right, so what we're going to do is actually use the replay for this example for a sell trade. Okay, guys, so as you can see, we're going to pretend that we're entering the market now for Euro GBP. We just open up our chart, and this is what we're seeing in terms of activity for the Euro GBP in the 5-minute time frame. So market, as you can see, is below the exponential moving averages, so this is an indication that we are in a seller's market. Okay, guys, very important that you understand, if market is below the EMAs, we're in a seller's market. If you're in a seller's market, you're looking for sell trades. However, if the market is above the exponential moving averages, we're in a buyer's market and we're looking for buy trades, okay? Always go with the trend, guys. If you're in a seller's market, you shouldn't be looking for buy trades, all right? And vice versa, if you're in a buyer's market, you shouldn't be looking for sell trades. Go with the trend, guys, okay? The trend is your friend, and that is a truer statement if there ever was one when it comes to Forex trading, okay? So we have a good possibility here where market remains below the EMAs. So what we want to do is wait for how long? We want to wait for at least 5 to 6 candles, or a period where 5 to 6 candles have not touched the exponential movement averages. And as you can see, as of right now, we have 1, 2, 3, 4, 5. All right. Now we have 6 candles that haven't touched the exponential movement averages. So now what we're doing is waiting for one of our candles to make contact with any of the exponential movement averages, okay? When that happens, that's going to be our trigger candle where we're gonna be entering or getting ready to enter a trade, okay? So as you can see, market has remained below the exponential movement averages up until right here, guys, okay? So market almost made contact here, but it didn't make contact up until this candle. So what I like to do, we're just gonna mark that trigger candle. We're gonna call that our trigger candle because now, oops, wrong one. Because now we're gonna get ready to enter our trade. But this is where we also have to calculate our stop loss and take profit levels. But before we do that, what we do with this candle is as follows. Including the trigger candle that touched or crossed any of the exponential movement averages, we're going to count back 5 candles. So 1, 2, 3, 4, 5, okay? So what we like to do from this point, when you identify your 5 candles, we're going to mark the tops and bottoms of those candlesticks. So right here and right here, all right? We're counting the bodies, not the wicks. Very important that you do this, guys. Bodies, not wicks, okay? Now, when you're in a seller's market, guys, again, we're looking for what? We're looking for sell trades. But here's the kicker, and this is something that I've seen a lot of people make a mistake on, all right, is that when we're looking for a sell trade in this area, we want to make sure that we're not entering the trade until market reaches the lowest point of our 5 candlesticks, okay? Because at this point right now, the market is up here, all right? And the common mistake people think about is that, okay, if I'm entering a sell trade, we want to enter at a high point, so that way we can possibly enter the best entry. But the reason why we don't do this, guys, the reason why we wait, all right, in this case, seller's market, we're looking for sell trade, so we're not going to enter a sell trade until market reaches the lowest point of our 5 candlesticks. And the reason why we do this, guys, is because of potential reversals. We have no idea if the market is going to continue to, you know, go down, which is what we want it to do, or if it's going to continue reversing back up, all right? So if you enter a trade prematurely and the market goes in the opposite direction, as it could happen, you're losing money and you're in a losing trade, okay, guys? So that's why we want to wait for retest, all right? We're waiting for retest for the market to reach this level. So this is what you can do. Instead of waiting, all right, and staring at a chart and waiting, you can set an alert, right, on your trading view, or you can also put in a pending order into your broker, okay? So how we do that, right, is we're gonna get our sell tool or our short position tool, all right, and I'm gonna mark it right here on the level that we want to enter the market, all right? By marking this area, you can see that our entry level is what? 0.90449, all right? So that would be for our pending order. That would be our entry level. But to calculate your stop loss and take profit levels depends on certain things. It depends on your trading plan. It depends on your risk to reward ratio, what you're comfortable with. It depends on, you know, just your type of plan that you are looking to invest in when it comes to trading. Personally, for me, with this strategy, I recommend targeting anywhere from 10 to 20 pips. All right, so in terms of a take profit level. So what I like to do on that, guys, is just drag it down. And once I reach 10 pips, which says it right here, all right, I'm gonna just leave it at this level and it shows you right there, take profit level 0.90348. All right, so you go into your broker, enter that as your take profit level. Now, here's the important part, guys. For stop loss, this is why I say this depends on your trading plan, is because, you know, it depends on what type of risk to reward ratio you're looking at. Personally, for me, with a lot of my trades, I like to do a 1-to-1. So in this case, if I'm targeting 10 pips for take profit, I'll do 10 pips for stop loss, all right? Or what I also like to do is use support and resistance areas as my stop loss area, okay? So looking at the 5-minute time frame, we're gonna look back a little bit. We can see that there is an area of consolidation right over here, all right? Now I'm gonna change this color to green, or actually no, not green. Let's do red. We'll make this a little bit thicker, okay? So that way you can understand what I'm looking at, right? So in this example, this would be my targeted stop loss level. Now the reason why I selected this area is because this area served as resistance and support. It served as resistance in this area. It served as support in this area. So if market's gonna retrace, right? For me, I would judge this as a stop loss level, okay? But what I recommend doing, and this is very important, guys, if you're gonna be targeting SNR points for your stop loss, I recommend dragging your stop loss a little bit beyond that support and resistance area, okay? And the reason why, guys, is because you see how some of these candles, right, can generate these long wicks, okay? Obviously the candlestick closed over here, but these long wicks, if they cross your barrier or if they reach your stop loss level, it's gonna throw you out of the trade prematurely, okay? So just in case if we have any of these long wicks, I want to set my stop loss a little bit beyond my my support or resistance area, okay? Now, let's see what happens. I go to my broker, I enter these points. Stop loss is at 0.90579, and take profit is 90348. All right, so I go into my broker, enter a pending order. Let's see what happens, all right? So market is still hasn't reached, let's just zoom in a little bit, guys. Market still has not reached our desired entry point, all right, which is the lowest point of the 5 candlesticks. So it's still pending, okay? All right. So we don't know what the market's gonna do, but it's gonna do what it needs to do, all right? Now, take a look, guys. Now our trade has been activated. Why? Because it reached the lowest point of our 5 candlesticks, which was our pending entry order, okay? Now the trade has been activated. Now let's see what happens, okay? So we keep going. Market's gonna fluctuate. And boom, check this out. We smashed our take profit level right here. All right, guys? Any questions on that? Let me know. But that is how you enter a sell trade following this strategy. Now, to answer another question that I know you might be thinking, what if we entered a pending order, right, just like we did, but instead of the market going down, it continued to go back up, all right? If we entered a pending order, obviously, and the market continued to go in the opposite direction, our trade never executed. So all we would have to do is just cancel and close that trade. We never lost any money because that trade never initiated, because it never reached our pending entry point for this trade. Okay, guys, so again, any questions on that, let me know. But now let's show you an example of a buy trade, all right? And this is also going to be revolving around our pending order, which actually, as of right now, is actually activated. So this is what, for the New Zealand dollar, US dollar. At the beginning of this video, I showed you that we had a pending order for New Zealand dollar, US dollar. Check this out, guys. Our trade has now reached our entry level. So let's go to our broker. Yep, there it is, New Zealand dollar, US dollar, fluctuating nicely in profit, but of course it will take a little bit of time for it to reach our level. Ignore the USD CHF, guys. This is a long swing trade that I'm in as of right since last week. So this is going to be interesting. This is going to pay off nicely, hopefully, for this swing trade. But New Zealand dollar, US dollar is what we want to focus on. So this is for a buy trade. So let's move this out of the way, guys. Okay, we're going to move this out of the way, just so I can show you why I entered this trade for a pending order. And let's zoom in here, guys. All right. So just to show you what I was looking at when I entered the market, it was around this particular area. This is our active trade that we have right now, guys. All right. So just to show you what happened, we're going to use the replay. When I had entered that trade, we were about right over here. Okay. All right, so market was above the exponential moving averages, and so we're looking at a buyer's market, so we're looking for buy trades, right? And all I had to do, right, was wait until we made contact, the market made contact with one of the EMAs. All right, so all I had to do was wait, and again, guys, we're in a 5-minute time frame, so it doesn't take long. And then we made contact right about here, all right? So what I did was, what's the rule again? We have identified our trend. So we're looking for a buy trade. We're waiting for that trigger candle, which is obviously this candle right here, right? So now we're counting back 1, 2, 3, 4, 5 candles. We marked the top and bottoms of these 5 candlesticks. And that's why we drew these, and that's why we have these yellow lines here. So now what we have to do is calculate our entry points, stop loss, and take profit levels. So for a buyer's trade, guys, we're in a buyer's market. You want to enter the trade at the top level of our 5 candlesticks. Remember it, all right? So very important that you understand and distinguish the difference between buys and sell trade parameters. Since we're in a buyer's market, buy trade, we're going to enter the trade at the highest point of the 5 candlesticks when the market reaches this level. And so we're looking for long position, right? We're going to mark it right here, okay, at our entry point or desired entry point, which is 65237. Now stop loss, this is what I decided to do for stop loss, guys, okay? If you know how to mark up your charts, all right, you see this horizontal line here. This line is a daily resistance level for the New Zealand dollar, US dollar. If you know how to mark up your charts, which you should do, all right, very important that you know how to do this, marking up support and resistance areas. This white line right here that I drew is a daily resistance level. So I figured since we're close to this area, I'm going to stretch my take profit level to that daily resistance, okay? So on this point, we're at about 36 pips and 36 pips targeted profit, okay? Now for stop loss, all right, I'm gonna bring it down to our nearest support, okay? We're in a buy trade, we're looking for nearest support, which is this white line over here. Now, why did I draw this white line? Well, because this white line, if we look back, served as resistance right here, and right here, okay, guys? So I figure I'm going to use this support level, this resistance level as my stop loss. So I'm using my judgment and I'm going to say, okay, well, since this is a nice resistance level, I'm going to use this as my stop loss for support. All right. So again, what do? We're going to set that a little bit beyond. So that way, in case if we have any long wicks, if we have any retracements, market dips down for a little bit. All right. What we're going to do is give it a little bit of wiggle room. So that way, if we have any long wicks, you know, we're not taken out of that trade prematurely. All right. So in this case, we're looking close to a risk to reward ratio of 1-to-1. All right. So as of right now, if we let the market fluctuate, again, guys, we're in a pending order and market is fluctuating below our targeted direction. So this is why we use these pending orders, because we don't know, again, if market is going to continue to go down. All right. If we enter that trade prematurely and the market goes in the opposite direction, we're in a losing trade and we're losing money. So that's why we're at a pending order at the top level for our 5 candlesticks. Now, as you can see, market has reached our top level of the 5 candlesticks, and that's why we are no longer in a pending order. We are in an active trade. All right. So if we fast forward to where the market is right now, you can see that we are now in the green. Okay. We are in our take profit zone. All right. And we are above the exponential movement averages, and we just gotta wait for this trade to close. So that's the strategy, guys. Hope you found this helpful. Again, practice on a demo account. Using this strategy is very simple. We just gotta follow simple criteria. All right. Identify areas where the market hasn't touched the exponential movement averages for at least 25 to 30 minutes or 5 to 6 candles. Identify your trend. Wait for your trigger candle, which is the candle that touches or crosses one of the exponential movement averages. Count back 5 candlesticks, and if you're in a seller's market looking for a sell trade, you enter the trade at the lowest point of those 5 candlesticks. If you're in a buyer's market looking for a buy trade, you enter a buy at the highest point of those 5 candlesticks, and then of course set your take profit and stop loss levels according to the plan that you're following. All right, guys. So again, any questions, let me know, guys. And of course, don't forget about our trading group, which will leave information down below. It's the best group ever, guys. If you want to really succeed in Forex trading, if you really want to make something of this, if you want to make profits and learn how to trade and make money every single day at the same time, don't miss out. So I'll leave all that information below. Thank you for watching, guys. Have a great day, and we'll see you soon.